So very good morning, friends. We're going to see one important question from Index 115. Quite a few might have seen this question before, but very important for this time, and also recently asked in a mock exam and generated a question as well. So let's quickly take a look at what is the question, and now we have to go about it. A lot of chances for 10 marks. So do pay full concentration and focus properly. A Limited is a company which is in the business of manufacturing engineering machines and providing after-sales services. The company entered into a contract with Mr. Anik to supply and install a machine, namely Model PI, on 1st April 2021, and to service this machine on 30th September 2021 and 1st April 2020. The cost of machine manufacturing to A was 1,60,000. It is possible for the customer to purchase both the machine Model P and the maintenance services separately. So Mr. Anik is contractually obliged to pay rupees A Limited rupees 4 lakhs on 1st April 2022. The prevailing rate for credit candidate trade customers in the industry is 5% per 6-month period. As per the experience, the servicing of the machine Model PA sold to Mr. Anik is expected to cost A Limited rupees 30,000 to perform first service and 50,000 second service. So assume actual cost equal expected cost. When A Limited provides machine services to customers in a separate transaction, it earns a margin of 50% on cost. On 1st April 2021, the cost selling price of the machine Model PA sold to Mr. Anik is rupees 2,15,927. The promised supply of machine Model PA and maintenance service applications are satisfactorily carried out in time by the company. You are required to segregate the components of the transaction that A Limited shall apply to the revenue criteria separately as per Index 115, and the capital amount of revenue which A must allocate to each component of the transaction. Prepare the journal entries to record the above in the books of A Limited for the year ended 2022 and 2023, and draft and extract revenue showing how the revenue should be presented and disclosed in financial reports of A Limited for the financial for the 2 years respectively. So this is the question, nice question. So let's see how we will go about it. So first one, you should compulsorily mention about the theory if it's 8-mark question. So a good or service promised to a customer is distinct if the following criteria is met. That is, the customer can benefit from the goods or service either on own or together with other resources or readily available. Readily available resource means what is, if it's sold permanently, customers already obtained on that day, and the entity is promised to transfer the goods to the customer is separately identifiable from the promises in the contract. These are the key terms you should reproduce, because at least 2 marks a day you can gain from this, even if you don't have the time to solve the exam. So these factors indicate that these are the criteria to be met. So now proceeding through the answers. So the key things is this box, which you can see that computation is very important. Opening balance, finance income, goods services payment, received, and the closing balance. So the amount here is specifically given in the question. On 1st April 2021, the cash selling price of the machine Model P sold to Mr. Anik is rupees 2,927, which is your which will be your closing balance on 1st April 2021. And now the 5% per 6-month period is given. So on the 2,15,000 closing balance, which will be the opening balance of that, it's April 2021, apply the 5%, you will get 2,596, and the services is 45,000. That is the service cost is 30,000, but the margin of 50% will be applied. So 30,000 into 50% give you 45,000. Similarly, 50,000 out of percentage 75 will give you 70,000. So if you do that, you will get your the opening balance as on 1st April 2022 as 3,25,000, and service 75,000, and the payment received as given in the question is 4 lakhs. So now 4 to 5 marks is already in your pocket. Now moving on to the journal entries. Mr. Anik to, on 1st April, this will be recorded. That is Mr. Anik to revenue. So that will be 2,50,927. Stake entry, then COGS to inventory 1,60,000, and 30th September finance income will be recognized, which we just saw in the computation. That is 2,50,927 into 5%, and the next one is the recognition of revenue of services. So Mr. Anik to revenue 45,000. And another important thing is narration is also very important for any question that comes from journal. So keep this in mind. Then the cost of services to payables will be 30,000, and similarly the same entries will be passed for the 70,000, 50,000 on 1st April 2022 as well. And your last entry is the bank to Mr. Ranik, the receipt of cash from the customer fully recognized rupees 4 lakhs. Then lastly, the balance sheet disclosure. So extract the notes to financial statement for year 31, 22 and 2023. So your sale of goods and the rendering of services and finance income. So in 21-22, the total value will come to 3,25,000 and 22-23 will be 75,000. Hope all of you follow till now. This is a very important question. So do check it out, do revise twice and make full use of it. Just keep going and keep up the intensity.